What's going on, everyone, and welcome back to Explain the Charts. Today is October 10th, 2025, and we are diving deep into one of the market's titans, Microsoft, ticker symbol Microsoft. We've got a fascinating mix of news creating both bullish and bearish narratives. So first we'll cover the headlines, and then we'll see how it all translates to the price action on the charts. On the bullish side of things, the sentiment from major analysts remains overwhelmingly positive. Just last week, on October 1st, Morgan Stanley reiterated their confidence by lifting their price target to an impressive $625, citing Azure's incredible 39% annual growth and strong AI integration. Adding to that optimism, a Mizuho analyst referred to the stock as free money when it was trading near $515 just a week ago, predicting a strong rebound this month. Microsoft also helped reassure investors this week by firmly shooting down rumors that it was planning to exit the Xbox console business, which gave the stock a nice bump. However, it's not all clear skies for Microsoft. A recent article from The Motley Fool highlights a growing concern among some investors that the company's capital expenditures on artificial intelligence are becoming excessive, questioning the potential return on these massive investments. We've also seen some reports of minor dips recently, with the stock closing yesterday at $522.40, slightly off its recent highs. This push and pull between long-term AI promise and short-term spending concerns creates a very interesting dynamic. The most significant event on the horizon is undoubtedly the next earnings report, scheduled for Wednesday, October 29th, which will be a major catalyst for the stock. Now, let's switch over to the daily chart to see the bigger picture. Looking at the daily chart for Microsoft, we can see a very clear and powerful uptrend that has been in place for most of the last year. The stock surged to an all-time high of $555.45 back on July 31st, likely fueled by tremendous AI hype and strong earnings. Following that peak, we saw a sharp but healthy pullback through August, which is normal after such a parabolic move. Price eventually found a strong level of support in the $495 to $500 range in early September, a key psychological and technical level that has held up since. This $495 level now serves as a critical medium-term support zone to watch. On the upside, that all-time high of $555.45 is the ultimate resistance level and the target for bulls. A more immediate resistance area appears to be around the $531 to $538 zone, which marked the highs from this week and early August, respectively. The price action since August has been forming a broad consolidation pattern, with a series of lower highs, but also higher lows since the September bottom. This tightening range suggests a big move is coiling up, and it perfectly reflects the indecision we're seeing in the news between the bulls and the bears. Let's zoom in on this daily chart to the period just after that all-time high to get a clearer view of the recent consolidation. Here we can see that massive gap up on July 31st that touched $555, followed by the immediate profit-taking. The price then bled down throughout August before finding its footing around $520 and then making that final push down to test the $495 support on September 5th. Since that low, the bulls have defended that level, and we've been grinding higher, but we've been unable to break past the resistance established in early August around $538. This current price action is essentially a battleground between that major support at $495 and the resistance at $538. A breakout in either direction from this range will likely dictate the trend heading into the earnings report at the end of the month. Now, let's drill down to the 1-hour chart to analyze the short-term price action. On this time frame, we can clearly see the impact of the Xbox news from October 6th. The price gapped up from around $518 and rallied strongly to a high of about $531. However, the sellers stepped in at that level, and the price has since faded back down. We are currently seeing a battle around the $522 to $524 area. This level is acting as immediate short-term support. If the price breaks below $521, we could see a quick move down to test the psychological $520 level. On the upside, the resistance to beat in the immediate short term is that October 6th high of $531. A break and hold above that level would be very bullish and signal a continuation of the uptrend toward the August highs. The volume has been fairly average during this recent pullback, suggesting it's more of a consolidation than an aggressive sell-off. Finally, looking at the 15-minute chart gives us a granular view of yesterday's and today's early action. Yesterday, on October 9th, the stock saw a notable dip from a high of over $524 down to a low of $517.40, showing some intraday weakness. However, buyers stepped in during the final hours to push the price back up to a close of $522.40. This long lower wick on the daily candle indicates that buyers are still active at these lower prices. Today's session appears to be consolidating around that closing price, showing some indecision as traders await the next catalyst. So, to recap everything and look ahead, let's go back to the daily chart. The key price levels to watch are critical right now. Major resistance sits at the all-time high of $555.45, with minor resistance levels at $531 and $538. On the support side, we have immediate minor support in the $520 to $522 zone, with major, must-hold support down at the $495 to $500 area. So, what are the potential scenarios? The bullish case, which I'd give a 70% probability in the short term, is that the price holds above the $520 support. Given the strong analyst ratings and solid fundamentals, the stock could make another attempt to break the $531 resistance. A successful break there, especially with good volume, would reinforce this bullish view and open the path toward the $538 level and potentially higher into earnings. The bearish scenario, with about a 30% probability, would see those AI spending concerns spook the market. If the price breaks below the $520 support level convincingly, the next stop would be a retest of that crucial $495 to $500 support zone. A break below $495 would be a significant bearish signal and would indicate a deeper correction is underway. The most important thing to watch for is a decisive break of this recent consolidation range between roughly $520 and $531. Of course, all eyes will be on the earnings call on October 29th, as that will likely provide the direction for the next several months. Remember to keep an eye on trading volume during any breakout or breakdown, as high volume will confirm the strength of the move. And that's our deep dive on Microsoft for today. Please remember, this video is for informational and educational purposes only and should not be considered financial advice. You should always conduct your own research and due diligence before making any investment decisions. Thanks for watching Explain the Charts, and we'll see you in the next one.